Good evening, everybody. All right, we're having a nice spring evening here in Pittsburgh. I understand from Becky that they're going to break some heat records there in Texas. So, you Texans, I'm sure you're having a nice toasty night. I used to live in Woodlands, Texas, and it was usually so hot there that my whole activity was staying in an air-conditioned house. And then I'd walk out to the swimming pool, jump in, and unfortunately the water was so warm it wasn't refreshing, and then walk back into the house. Grass fires, all right. Okay, we're going to do just kind of a little montage here of candlestick power trades. So the first thing we're going to look at is the overall market. We can see the indecision that traded in the Dow over the last couple weeks, which allows us to make some pretty good assessments of what's going on in uh, investors sentiment. And just like a doji represents indecision between the bulls and the bears, same thing occurs when you have up, down, up, down, up, down, and you're still trading in the same trading range. That also shows indecision. Which way is it likely to go from here? Well, usually that's an indication based upon where you are with the stochastics, but the probabilities are pretty strong that in being in the overbought area, that if they started trading weaker today, they were going in this direction. So now the next assessment is wave one, wave two, indecision going into wave three. Same scenario here on the NASDAQ. Wave one, look at the indecision. In this case, look where it kind of resisted, right there at the 34. A lot of people ask, why do you have the 34 on your chart? Because that works reasonably well. But the fact that they closed back below not only the T-line, but below this level, that's a good implication wave three is in progress. Now, that's also going to be a function of tomorrow when the CPI report comes out. If it's better than expected, they might bring it right back up into the trading range again and remain sideways. If it's what they expect or worse than expected, look for wave three to the downside. So a power trade is something where you can put all the probabilities in alignment. Right now, if we can pretty much assume that we might be in a downtrend, there's going to be a lot of stocks that are trending down. But what we want to find with the market heading down, which stocks have the strongest prospects of a downtrend. So you can see our recommendation on QTWO the other day was based upon that bearish best friend, doji gap down, stochastics heading down, and look where it occurred. Look where your bearish Harami doji occurred, right smack dab at the 50. Why is that more relevant? Because that's pretty much telling us what everybody's decisions were right at that level. And then the fact that they gapped it down not only told us they were not going to go up through the 50, but the 50 was acting as a resistance level. And what was it doing to the trend? Well, you can pretty much see that it was in a downtrend. They popped it up to a resistance level. Where do you think the next price move or the next target is? At least here, and then possibly down in this range. That's also going to be a function of whether the market keeps selling off. So in the chat room, occasionally you have people say, can this be shorted? And if you look at it, say, yeah, it's heading down, but there's no real signals that just kind of diminishes the probabilities. What we're looking for is downtrending positions that have signals. So you can see the rollover and upstart. You can see how it broke this little support level, and it did it with a doji sandwich and a close below the T line, followed by, I'm sorry, said that wrong, a left-right combo, which is one of your strongest signals, followed by a doji sandwich. And what does a doji sandwich imply? There's going to be more up downside. So when you start adding this all together, say, well, not only is it heading down, but we can also see how it's rolling over. Pretty much failed at this level. What's our next expectation? Well, at least to test this level, so you're heading in the right direction. And if it breaks that, there's your next target. And if it breaks that, you got a wave 1, wave 2, going into wave 3. So this is nothing more than adding everything up visually to see who's winning, the bulls or the bears. And if we can see strong sell signals, obviously it's the bears. So when you take a look at a chart like Intel, look at your bearish kicker signal that closed below the T line. Kind of failed here at the 34. You were already in a downtrend. So when it closed back below the T line, what should be your kind of your general assumption? The downtrend prospect is still strong. Then look what happened a couple days later. A bearish trend kicker signal. You got a bearish kicker signal, which is a strong downtrend. Got a bearish trend kicker signal, gives you a strong downtrend. So where is it next, or the next move likely to be? Kind of project at the bottom of this channel, which takes you down into about the $37 range. So that's where you can make a much more calculated, I want to say, strategy option. In this case, today we recommended you could buy the June. Now this is only about 8 days out or 6 trading days out. You buy the 40 puts, and then you buy the 40 puts, and then you sell the 37.50s. That was a net of 39 cents. So what was the trading strategy? Well, if over the next 6 days they can take this down, again, a function of the market selling off, if they get down to the 37 range, now that 40, 37.50 spread turns into 250. That's a decent rate of return. The 34 is exponential, yes. Some people say, well, why don't you use the 20? We did use the 20, but the 34 also works fairly well. And if somebody wants to use the 20 or the 100, you can put it on here. And I always come back to the fact that the nice thing about candlestick analysis is the most, or the primary analytical indicator is the signal themselves. Everything else that you put on the chart is just added confirmation that signal is going to be working. So once again, lots of downward pressure, but if it gets down here over the next 3-4 trading days, this 39 cents going to 250 obviously is a high probability, high profit return. So anything that we can see that kind of adds to the probabilities, you can see there's kind of a support level right in here, kind of a wedge type formation. And then what do we know about a doji sandwich? Well, if we see a doji, the candlesticks are heading down using the doji rule, which means if it opens lower, it's going to trade lower. And if it trades lower, it's probably going to do the same magnitude day as this one right here. What's that tell us about our support level? It's not acting as support, a lot more downside. Where do you think the next likely target is that everybody be watching? Down here at the 200. So the T line is what keeps your emotions out of your trading, or should keep your emotions out of your trading. Because what is the normal reaction? And I can say this because I always did the normal reaction before candlesticks came along. Where would you take profits if you were short? Very simple T-line rule. You stay short until you see a buy signal and a close above the T-line. Or if you covered your short position, you can always reshort it when it comes back down through the T-line. But the main aspect to this is, what is the normal human reaction? Boy, I've got a good profit, and boy, would I look stupid if I let that profit go back to be a loss. So just because I have a profit, I'm going to take that profit, which has absolutely nothing to do what the overall trend is doing. That's where the T-line gives you that much more, discipline to not take profits just to take profits, but to watch to see when that trend is over. So obviously we've made some very good money shorting Carvana. And the whole time that it's traded lower, they could never get it back up above the T-line. That just allows you to continue to maintain your trades and produce profitability. Now, the T-line works just as effectively on the bearish side in a bearish market as a bullish trade in a bearish market. ALDX, big fry pan bottom. And what are the benefits of a candlestick pattern? Well, that's the graphic identification of what's going on in investor sentiment. What do we know happens in a fry pan bottom? This isn't all of a sudden buying pressure. This is a buildup of buying pressure. And so notice on a fry pan bottom what you're more apt to have occur even when the markets are selling off. The pattern is the main factor. There's something going on in investor sentiment that has nothing to do with what the overall market trend is. So the way we can take advantage of price moves is knowing what a pattern looks like, what our indicators are telling us as far as support and resistance. But putting all stars in alignment, would I have very many long positions on right now? Definitely not. Not with the market starting to sell off. But that allows us to find the trades that are giving you the strongest sell signal, like a bearish kicker signal on Zim yesterday. Our entry was, if it opened weaker today, short it. There's still a lot more downside. So this is now, I guess the added benefit of having a chat room that everybody's kind of looking for the same signals and patterns allows you to start seeing a supply of trades that have good potential because everybody's looking for the same thing as far as a candlestick pattern. That even if you've missed this in your scan the night before, somebody might say, hey, take a look at XYZ. It's selling off and it's producing a bearish kicker signal or a bearish best friend or some other signal. So all you're doing basically is identifying the supply of trades that are kind of corresponding with the market direction. So any of you new people in here, what we're going to do is allow people to come in for a 2-week free trial. Not only in the, I guess we're going to do this not only for new people, but if you're if you're a member already, we're going to do a 2-week free trial to the options room because that's a whole different conversation over there. When we've already identified good trades, now we pick up different strategies that take advantage of those trades. So, Becky, thank you. I was going to say, I forgot to make a copy of that link. So anyways, the one thing that we try not to push on people is that you're always going to find good trades, and we're going to show you how to make find the big trades, blah blah blah. No, what we're trying to do is teach people how to identify when those trades are setting up. So anyway, so that's the candlestick chart patterns. Are the options group sessions recorded for later viewing? No. No. The options room, I come in that one if I'm coming into the main room around noon. I usually come into the options room around 11:15, and we go over ideas. And then I'll come back in later in the day before I come into the main room again. Java, yeah, that's no problem. It's very simple with candlestick analysis to set up the scans. A lot of the formulas are down in your very right-hand corner of your page on it that you're on. There's a little file folder down there. There's a lot of scans in that file folder. Okay, so with that, let's take a look at some live charts. Whoops. All right, so this was so this is why, if you know what happens with human nature, you can see there was a good strong downtrend. And this is what kind of gets you away from listening to all the expert talking heads, because I've heard so many people say, oh, it can't go down any further. We've had 5 weeks of downtrend, and we're getting back to where the earnings or all the fundamentals are compressing to be in the buy zone, blah, 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 which means they have no idea what direction markets are going and when to be buying stock positions. This is the great advantage that, again, I can point out with strong conviction, which basically says that prices do not move based upon fundamentals. This is what I always kind of reiterate for people. Prices move based upon the perception of fundamentals. And we've got the most accurate assessment indicator, which is human nature, to show what everybody thinks about what's going on in any price trend. So right now, as you can see, when they broke this support level right here, closed below the T line in a downtrend that, I forget what this was, down 18% or 20%. Can it possibly go down anymore? Nah, because a normal correction is usually at most 20%. That's why I always say, let the market tell you what the market is doing. Don't listen to any of these talking heads, because the atmosphere, the environment today may be completely different than what it was in the last pullback. Maybe inflation is going to be a lot more detrimental to investor sentiment. And you can pick out all sorts of reasons why people might be selling off. So let me go backwards here. What we want to teach people, or what you want to learn, is what happens when situations happen in investor sentiment. Now, why did that not work? Well, for crying out loud. When you have a big price move like this, or like this, that means there's usually going to be some follow through. Darren, yes. And I tell people a lot of times I'll say, here's what I think, but I do a prelude to say, and as soon as I'm done with this statement, disregard exactly what I said, because I have no more knowledge than anybody else or the man in the moon what's going to happen in this market. So this is the things that we can take advantage of. Something sells off hard. What's our first inclination? Oh, it might pop back up. But knowing that if something sells off hard, usually there's going to be follow through. This was a good illustration back here on Netflix. Sells off hard, there was a lot more follow through. I bet rocket scientists would know. No, not even rocket science. The rocket scientists have probably no less than what the markets are going to do. Dang, what was I thinking? I had one I wrote down that would kind of also illustrate this move. I don't know why this one. That one's not coming up. I'm sure I wrote that correctly. So here's the type of analysis that we want to kind of be prepared for. And I'll do a session here pretty soon on observations that just are not fitting into a definite signal or pattern. But if you're in a bullish trend and they close near the low end of the previous day's trading, especially up here in the overbought area, that is not good. That is telling you the bears are in control. Be ready to close it out if you don't even close it out on that day. That's just telling you if something looks like this, close it out. That's definitely not a bullish sign. Now, are there possibilities that could go higher? Possibilities, but the probabilities are that something has changed. You want to be out of that trade. And I'm trying to think of which other ones. Now, here's one that I did close out today. Even though it's still in an uptrend, the fact that they gapped it down and closed it pretty close to the previous day's low and the market was selling off, that said, yeah, they're selling this one off. That's not a good probability place to be anymore, especially with stochastics up here in the overbought area. Where do you think it could go back to? It could come back here and test the T-line. So is it going to do that? Don't know, but the probabilities tell us that this is not a good place to be based on human nature. So these are the type of charts you want to look for. Things that are doing sell signals. So you had kind of a bearish left-right combo here. Your stochastics are heading down. And today you had a little doji gap down. Now where's your next target? Probably right there. And if it goes through there, where's your next target? Probably right there. Now, I say probably because it's heading down. The stochastic's heading down. And the market's heading down. HUSA, what if it ended up being a doji? Would you still close it today? Yes. If it closed near the low end of the trading range as a doji, that far down, that far away from the T-line, the stochastics rolling over and the market selling off. Worst case scenario is if you held it It has to open positive. The doji rule has to open positive the next day. So that doji rule works extremely with an extremely high probability factor to it. Hags. So, oh, this is where I was trying to get to. What was the other one? The bigger the signal, the more compelling there's been a change of investor sentiment. Well, for crying out loud. The bigger the signal, the more compelling there's been a change of investor sentiment. Wouldn't be afraid to be shorting this one on weakness tomorrow because of your little bearish best friend signal. Where's your next likely target? Right here. So if it goes from 13 to 950, that's a pretty good 40% price move. Yeah, I'm going to be watching that. Why? I know most people will say, well, man, that's a big move. Maybe it's going to bounce. That's why a lot of people don't make money. They're afraid to go after situations knowing what the result is expected to be. So Zillow kind of broke this downtrend with a doji right here at the 34, gap down best friend, strong selling. Let me draw some lines here if I can. Now look for wave one. Notice where this kept resisting. At the 50, at the 34, and what can we assume about this situation? We've got a bearish best friend, broke the support line here, stochastics heading down. Another one you could short with a high degree of expectation on a weaker open tomorrow. And oh, this one's even more compelling. ZG, Zillow Group, because it broke that downtrend, but look where this one failed. Right smack dab at the 50, did a shooting star doji, and then a gap down. That's pretty much telling you that's even more evidence that everybody was selling at an observable resistance level. I can't get rid of these little lines. All right. Now, do this. Okay. FRGE. You can see where it was rolling over. And it was down here. Now what type of evidence do we have that the bears are definitely in control? Because there was a support level at the 200. The fact that they did a doji gap down through that level, what's that kind of imply? They're still selling this one off. So why would we be buying something already in the oversold area? Because this is more of a pattern. I don't know, Andrew, and I don't really care. I know I don't know. One might be a common one. It might be one with voting rights. Somebody else know the answer to that? So when you see something going up astronomically, and then they do an evening star reversal with a bearish best friend, at least you can figure your first target. And then, oh, I hate when I do this. you're in a downtrend, you might be coming all the way back down into the trend. Why would you suspect that? Because exactly the information that is built into this signal, which says they're selling off with great force out of the oversold area, look for more downside, at least back to the 50. Zen, oh, I think I had this more on here to show that when they start gapping down in the oversold area, that's when you start watching to take profits. Wave 1, wave 2, now into wave 3. All right, thank you, Brian. This is what you want to look for also. This is why I always say when you are in an uptrend, you're getting up toward the overbought area. If you're long, you always have a safety stop in. And a lot of people will ask, well, do you put your safety stop down 3%, 5%, 8%? No. You put your safety stop at a place that tells you the bears are in control. In this case, we know if the bears brought it back down below the T line, you want to be out of that trade. Now you look at it on the basis of you were in an uptrend. Now you have a strong sell signal. Where's your next likely target? Down here. Now, why is picking out a target important? Because if this had the potential of going down 6%, that might not be real enthusiastic. If it has the potential of going down 15%, yeah, that's a much better reason to be getting into a position where you can make some money. So when you see something that breaks the downside and does a candle like this, what are we anticipating? Well, they sold it off, but the bulls are stepping back in. When they open it lower the next day, what's that tell you? There's no follow through on the bulls. When they gapped it down and brought it back up, the bears are still there. That was the same situation on fuel cell. They gapped it down on bad earnings. They brought it back up. Now, if they open this lower tomorrow, I don't know whether you can short this one because it's below $5, but if you were long, hoping that it's going to move back up, if they open it lower, you close it out immediately. Same scenario on this one. Look how the 34 acted as a resistance level. There's your bearish best friend. Broke this kind of little uptrend. Oh, and I don't have the volume over here. But so the first thing I do is if I see there's a trade that looks like a good put trade or a put spread trade, so I'll go and say, all right, this looks like a good short. How can I make money with it? Let's take a look at the puts. Then let's see if I can do this. Let's go here. Oh, I closed this out earlier, so they had to reboot. Ah, yeah. Well, if this ain't a fine howdy do. Okay, so if we go here, ERUP. I hope this is on the screen still. But if I was going, the stock closed at 59.78. So I first take a look at the 60s. Well, there was only one contract traded today. That doesn't make for a very good trader. So I look at this and say, all right, there's only one contract traded. It's going to be hard to get in and it's going to be hard to get out. So the first reason that we're in trading in the first place is to make money. And if we got situations where you can't make any money with it, go on to something else. Now, there are sectors like the Bitcoin Myra. You just stay short. Riot. Again, here's where the T line becomes a very effective indicator. You just stay short. And coin. Another one where you could probably start thinking about going short on this. You wouldn't short. Oh, you could short the shares of Trump. Yes. But there wasn't any puts that you could do. So if you like that as a short, and you say, well, I'm going to try to leverage it as much as possible and buy puts. Well, if you can't buy the puts, you can still always come back and short the stock. So here's another one. Kind of your little evening star signal twist. You could short this one on weakness, figuring here's your first target, here's your second target. And look where your kicker signal occurred. Let me make this smaller for a little bit. Which direction is this stock heading? You're in a downtrend. When it started buying or showing buy signals in here, where do you think the next target was that everybody was watching? Obviously the 50-day moving average. Then we can see what they do at the 50. First, you had a bearish left-right combo. They tried to come back up again. The second time they approached it, they did a bearish kicker signal. Now, obviously, if they're selling us off with the strongest candlestick sell signal, a bearish kicker signal, what's that tell you what everybody's decision is when they hit the resistance level? They're selling it off again, probably continuing this downtrend. Okay, so are there charts acting well in this market? Yes. You look at Cal, bullish engulfing, right smack dab off the T-line. Why is there a lot of strength in this one? Look at your kicker signal that started this uptrend. Could you be buying this one? Yes, on positive trading, it's probably trading higher. But would you be buying this one? Well, if we wake up tomorrow and after the CPI numbers come out at 8:30, and it shows that the pre-market futures are showing the Dow's going to open up down 300 points, you're probably not going to be rushing into any bullish trades based upon the market still selling off. Al, no, I'm a swing trader, so I'm looking at the daily. If I'm day trading, I'm looking at the 10-minute chart. So I'm usually day trading futures. So if I see something like this, if I was trading hogs today, which I didn't because they gapped it down, but there were times where if you went to your 10-minute chart, you could see when you should be selling it, when you should be covering your trade on a 10-minute basis. So you use the charts that fit the time frame that you're trading. While we're here, we'll just take a gander real quick, see what crude oil is doing. That's not the right chart. All right. Crude oil still on a steady uptrend. Gold, flat as a pancake, which pretty much tells me I wouldn't be trading any of the gold stocks because they're all probably trading, well, in this case, trading lower. Yep, maybe the gold stocks are shortable at this point. But we recommended this one a while back because of that best or that kicker signal. And look what the trend is doing. The 45 degree is what we expect. Now, just the opposite. If you see a bearish kicker signal and a big move, it's probably going to have more downside. A bullish signal, kicker signal, usually going to have a 45 degree. And oops, this one was acting better earlier. However, if you were looking for a long position, look at your inverted hammer right smack dab on the T-line. If this opened positive, what did we know? What will we know? Well, if they open positive after a kind of an inverted hammer signal, the probabilities are 95% or better that you're going to be in an uptrend, which means you're probably setting up for a J-hook pattern. And RADI, if this opened above this level, what type of pattern do you have? Got a J-hook pattern, which obviously supported right here at the T-line. So the only reason I'm showing short positions is, long positions, is there's some people that just don't like to short stocks, which means there's still always some long positions that can be bought even in a down market. So look at the illustration on BMEA. Look where it pulled back to. What's our normal trading habits? There's your bobble breakout. Came up, failed at the 50, pulled back to the T-line, went through. Then you had selling. That would have been your stop. Where was it moving to? Right smack dab to the 50. What do we know about a bullish Harami? Tells you the selling and stop. So just very simple analysis. Where did the selling stop? Right when it hit the 50-day moving average and started back up. What broke this out? A doji sandwich, which implies more upside. So this is where you can put your, knowing the signals and patterns, and watching the support and resistance levels, you just dramatically improve the probabilities of being in the right trade at the right time. And there's your fry pan bottom again on this chart. Look at all the dojis down here. Remember what we said about indecision? The more indecision you see, when they come out of that indecision stage, they're telling you exactly what they're doing. So would you be buying this one? I wouldn't be afraid to be buying this one on strength tomorrow, because not only do you have a fry pan bottom that broke the above the T-line, but it did a doji today. So if they open up positive tomorrow, where do you think the next likely target will be, even on a day trade? Up here, because that candle right there will usually be the same magnitude as that candle right there. So the nice thing about candlestick analysis is you can make a pretty good assessment of what's going on in investor sentiment based upon the signals and patterns that we know work time after time. So I don't know if there's, but also, where do you put your stop losses? And this is what I keep reiterating to everybody, that no matter where you are, but especially if you're in an overbought condition, This one had a very nice chart pattern to it. Again, look at your fry pan bottom, nice move, double doji, traded positive. And I'm saying this not as sage advice, but from the voice of experience, that if you're in the overbought area, and you see, oh man, and I've done this so many times, this is really good, it's doing what I expect it to do. I always have to slap myself in the head and say, all right, where should this not be trading today? If it's trading up here, doing a double doji, confirming our fry pan bottom pattern, take 7 seconds and put sell this position if it comes back down through the open. Because logic says if it comes up here and then comes back down through that open in the overbought area after a couple of days, you want to be out of this trade. Now, the reason I like to illustrate this, and I did show everybody in the chat room, it is just as exhilarating to be in a trade where you've got a big move, you take some profits up here, or you held on to a position. It's just as exhilarating for me that if I own this and I didn't put a stop in, and I came back from lunch and it's down here, I'm thinking, what the heck, you nincompoop? All you had to do is put a stop there. If I put a stop there and it was trading positive and I'm thinking, oh, everything's great, and I come back and it's down here, it's just as exhilarating for me to say, man, I'm glad I stopped out there instead of holding on to this. Is that a tweezer top? Let's just say it's close enough to consider it to be a tweezer top. Okay, that's about all I got. In this volatile market, even if the market opens positive, it's just as likely to fail and head south again. Doesn't that make long swing trades less promising? Long swing trades, yes. But I think you're missing something in that analysis. It's just likely, yes. So if I was buying something tomorrow based upon a bullish confirmation, and let's say hypothetically, this opened and started trading positive and I was buying it, but I'm also expecting the market that if it starts selling off, that the downtrend's in progress, that I am going to be that much more diligent to say, all right, if I am buying right here and it's heading up and I'm looking good, I'm definitely putting a safety stop in because I know the market's selling off, but I know this pattern is working. But if the market starts becoming the oppressive factor of any buying, I want to be out of this trade if they've decided they're not buying it anymore. Yeah, so now we can make intelligent assessment of what we should be doing based upon the signals and what type of strategies. So this is where maybe not buying puts is the best place to be doing something on Intel right now. And I'm picking this out because I looked at the numbers or did the trade. But maybe a put spread is much more. Gents, yes, when you sign up, you'll be getting a password for the options room. Well, that's when you sign up for it. Yes. Okay. So we know that investor sentiment now has the probabilities of going in this direction. We also know that our indicators, such as this one, the corporate bonds, still heading lower, tells us. So what does guest mean? It means you're a guest, or you can come in for 2 weeks and see what the conversations are, see what the picks are, see what the strategies are, and decide whether that's someplace that you want to remain or go on someplace else. So you've got the corporate bonds still selling off, not a bullish indicator. You've got the financial stocks like Goldman and JP Morgan, Morgan Stanley all selling off. That's also telling you that if the financials are trading down, pretty much means the market is still heading down. Okay, yes. If you can't come in right away, you just email Abraham and say, can I start my 2-week free trial on such and such a date? Let's see, what else was I? Oh, so if you're looking at the biggies, they are also indicators of what's going on in investor sentiment. So if they're selling off the big stocks, that's also telling you that the traders that like to trade the big ones, how long is the options group free trial open? Oh, I don't know what that means. How long do you have to decide? Anytime. That's the whole purpose of coming in for 2 weeks, is to see whether you're getting enough information that is going to be improving your trading based upon if you're in the main room and you're learning what signals and patterns are working effectively for any type of trading. Then the next thing you want to know is, how do I take advantage of that information and maximize my potential by doing option puts and calls or spreads, debit spreads, credit spreads. So everything that we do in the options room, it's not like you have to become a sophisticated trader. I keep the my trading as simple as I can, because I don't want to spend hours a night trying to figure out what the best strategies are. Yes, gents, this isn't a difficult process. If you want to try the 2-week free trial, sign up for it, and Abe will probably get you a password. All right, so the other ones. And if everything else is confusing, you can just email Abraham at candlestickforum.com and say, I'd like to try the 2-week free trial in the options room, and he'll get you set up. So the options are swing trading or day trading. Whatever trading style you want to do. We're not showing people how to trade a specific time frame or style. We're showing people how to analyze what a trade is going to do, and then based upon your own trading strategy, how you fit it into what you're comfortable with. So Apple selling off. Nvidia selling off. So these all imply that they're selling the biggies, meaning the traders that everybody likes to trade are selling off. That's kind of an additional confirmation that the bearish sentiment has taken over. Okay, so are there any general questions on candlestick analysis? Oh, none. All right. I guess, Rick, go ahead and do the double line. And in 3.8 seconds, do the next double line. AEE, stay short. Alcoa, you can be shorting this one. Netflix sold off today, came back below the T-line. Now, this isn't a real strong sell signal, so I wouldn't be long. Maybe I wouldn't be shorting this one. Apache, one of the oils, you can kind of figure you're in an uptrend, but you may be coming back to test the T-line. That'll also be a function of how how crude oil trades tomorrow. But right now, crude oil is staying up above the T-line. Go, that's a strong sell signal. Notice they took it up and then they reversed it. Doing a bearish engulfing signal right there. That one I'd be ready to short on weakness tomorrow. Again, weakness would be a combination of it opening lower and the market's opening lower. RLX, no, today I would have been out of this trade because look where it closed. It closed back below the open of a candle that told you they were breaking out. That's not a good sign. I would have closed that one out. So if you've stayed long, the only way you can stay long now is it has to open positive and trade positive. If it starts trading lower, close it out. They took the wind out of the sails. And 10 cents, same scenario. Now you're still in a fry pan bottom. So what should be the assessment? You should have been out of the trade, but now you watch to see what happens when they get back to the T-line. Dominoes, just stay long. As long as it stays above the T-line. Molson's, you can be shorting this one. I say you can be shorting this one. It's not a real good trader. I definitely would not be long. And I probably wouldn't short this one. There's probably better ones to be shorting. BWXT, look at kind of your trend kicker signal breakout. Now that is a good strong chart. Natural gas, still in an uptrend as long as it closed back up above the T-line today. Now, you got to be careful because you got an evening star type signal. They brought it back up. But if they open this lower tomorrow and you're long, I'd close it out. It should open positive and trade positive. That's a good looking chart on the dollar. Stay long. Hello. If you're long, it has to open positive and trade positive. If it opens lower, that means they've failed at the 200 with a shooting star doji. If it opens lower tomorrow, close it out. AMAT, you can be shorting this one. Micron, you could be shorting this one. AMD, this one's still in a channel. That'd be the least of the ones I'd want to short. Twitter, a non-trader. I wouldn't be long or short just based upon this chart, and I wouldn't be long or short because you don't know what's happening or what Musk is going to do. I mean, it could be all over the place. So if you're looking at a chart and you don't know what the probabilities are, if the probabilities are in your favor, go on to something else. That's the whole purpose of candlestick analysis, is it's going to identify which charts have the better probabilities. This one, if I had been long, I would have closed it out today on Lilly. Wouldn't be long or short. There's really no direction to this one. Let's see, what do I got here? Cisco. That one I'd get ready to go short. You can see where when they sold it off, the bullish Harami told you the selling had stopped. Where was your next target? See what it was going to do with the T line. Now you're seeing what they're doing at the T line. They're starting to sell it off. And Gush, another one that you probably want to see open positive tomorrow. If it opens lower, take some profits. This one, you get ready to go short. You're still in a downtrend. No, the 34 is the gray. The T line is the black line, the 8 exponential moving average. FTNT. Now you know what to do here. You get a doji right smack dab on the 50. Use the doji rule. If it opens lower tomorrow, close out the position. Love, you can short this one, yes. Sava. Sava, if you had been long, I would have closed out long positions. What are all these? But I wouldn't go short until it comes back down through the 50. You could go short on this one, but remember, you're not really in a major trend. So if you're shorting it, you don't want to see it come back up above today's open or close above today's open. Very. If you're short, stay short. If you're thinking of going short, short it on weakness. AUPH, I would have closed this one out today if I was long. It's now kind of a nothing chart. Yes, just Chris, just email Abraham and tell him that's when you'd like to sign up. So, all right. So tomorrow when we wake up at 8:30, they'll put out the CPI, show what the inflation is. If it opens lower, kind of expect more downside. All right, everybody. Have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then. Thank you, Becky. Thank you, Rick.